Okay, hey guys. Hey, this is Demetrius with Keela Traders, and actually, it's pretty late tonight, but I wanted to do this video here to just share information, some information with you guys about one of my favorite assets to look at, to study, and to trade, and that's gold. And so, I want to start out with this video here, looking at what the current price of gold is. And so right now, what I want to do is look at this article here from J.P. Morgan Chase, and it talks about just the prices of gold. People are always predicting the prices of gold. Gold is one of those very safe havens. People think that the value of gold is going to hold itself, which it definitely is compared to the dollar or the yen or whatever different currencies. So gold is a very popular asset and one of the probably most collected assets in people's portfolio when you look at savings and investings. Okay, so this article here is talking about, and this is from last week. It's talking about will gold prices hit another all-time high in 2024, and so possibly they will. There's some analysts that say gold prices are going to continue to go up. Some are saying there's some instability kinds of things around the world, and so maybe gold prices are going to tank as the overall economy, stock market, and those kinds of things start to push up. That people will be leaving that safe haven of gold and going into different assets like stocks and bonds and ETFs and those kinds of things. Okay, so the reason I'm highlighting this though is because I want to take a look at some of these things here. And so one is gold prices soared to an all-time high of a little over $2,100, 2135. That was by the end of 2023. There's a bunch of talk on this particular website about Fed cuts, interest rate cuts, and those kinds of things. And so I'm going to move myself over here to look at a couple of these. So gold prices touched that high. Interest rate cuts and yields, can once again become key drivers behind whether gold prices are going to go up or go down. One of the peak forecasts for up to 2025 is that gold could peak up to $2,300, and so that can be a pretty significant move in the price of gold compared to where it is now. We're going to take a look at that, but also at the same time, our mindset here at Aquila Traders, we're Aquila Traders, and so we like to look at assets. On a regular basis and really see where there are opportunities in the market to trade these assets instead of having to rely on analysts and the feds and global economy and all of these different kinds of things, instability that could make the prices go up or down. We prefer to take an approach to say, use some analysis, use some technical analysis tools, things that we teach and train and use people to kind of get an idea of how you can take advantage of the prices of gold, something like that in the market, and not have to be concerned about, whether it's going up or whether it's going down. It's pretty much just getting familiar with the tools that you can use. And we use a lot of those tools, some of my manual things that we can learn or have learned and are able to teach people about, how to read the language of financial charts. But there are also automated systems that we have as well that we've trained and taken advantage of AI. AI is one of the fastest growing technological sectors right now. And so we've been able to capitalize on that and take strategies and build strategies that came from input from professional traders and people that have been involved in all these different assets for a long time, and we've been able to use AI to help us train our systems to say, go in and find an asset, something like gold that I have an interest in, but help me maximize my investments. Help me maximize my returns. Help me to see, when is a good time for me to buy gold and when is a good time to get out. As we keep going through this particular article, they talk about a lot of news events and things that could, make the prices of gold continue to fall. Here's an overall performance chart for gold. This is going back from all the way back to 2001. So you see the prices of gold just have steadily, increased on here. This is the 100-day of the Fed cut versus the actual date of that and the price of gold. So there's a bunch of different things on here that I'm not going to take time to go through in here. But this thing I do want to highlight what I mentioned a little bit earlier about predictions through 2025. And so back to what some of the major financial companies, people like J.P. Morgan, Chase, and others, Bank of America, and those kind of people that are really good at what they do. They're expecting the price to be over $2,300 sometime in 2025. So I'm going to go through a kind of a scenario and kind of really explain how we're able to help people take a look at their financial investments and different strategies when it comes to something like gold. We're going to use gold as this example. Okay, so I'm going to jump over here to one of these financial charts, and this is one of the ones that we use in our trading. And so I'm going to walk through an example, a scenario. So let's say before I jump over there, that approximately right now the price of gold is around $2,000. Okay, so let's say if you're a person who has an interest in gold and you want to buy gold because you really believe that the price is going to go up to $2,300 or $2,200, something like that. So let's say, for example, if you have $10,000, and right now the price of gold being right at $2,000, they can get you 5 gold coins. You can go buy 5 gold coins. You can Google or go to a lot of these different find a very trusted and reliable asset company to buy your gold coins. If you're doing that from, make sure it's someone that's has been vetted, that's regulated, that kind of thing. But let's say you're going to do that, and that's going to get you about 5 gold coins. And so for your 5 coins, you're invested in your $10,000, and by hopefully in 2025 that can go up $300. You'll make $300 a coin. That's about $1,500 profit. And so that's going to be very good, right? So $1,500 over $10,000, that's roughly 15% profit. And so that's very good. But let's go over to the financial charts, and I'm going to show you the kinds of things that we like to expose people to see how you can make substantially more, significantly more returns just by getting a little bit educated or by tapping into some kind of systems and things that can help you with your investment strategies. Okay, so let's go over here and look at. I'm going to go into, this is our trading system that we use. This is a MetaTrader 4 system. It is really just a system that we use to buy and trade assets. You can trade a huge variety of assets. A lot of these things that you see over here in the corner, everything from currencies to the actual assets like gold, silver, platinum, oil, natural gas, wheat, soybeans, corn. You can trade a whole bunch of different assets. In addition to that, the major stock markets, the Dow Jones Industrial Average, the S&P 500, the NASDAQ, a huge variety of individual companies like Amazon, Facebook, Netflix, Google, Meta, Facebook now, but a huge bunch of companies. So right now, let's go back to our focus here on gold. So this is what I want to show you that's going to be pretty interesting. So let's say we just started 2024, right? So let's say if I wanted to go in and I was a person that said, look, I'm interested in putting my $10,000 into buying gold, and I want to buy me 5 gold coins. Let's look at this chart here. And it's going to show us. So this is just a financial chart. It's just pretty much these are candles that are moving up and down, and they pretty much just reflect the overall price of gold. So I'm looking at gold right now on an hourly chart. Let me go over to uh, more like a daily chart, and that's going to help me kind of smooth this out a little bit. Okay, and so on this daily chart, this is the price of gold daily, and so every one of these little candles that you see on here, each one of these represent the price of gold for one day. And if the candle, in this case, my colors are green and white. If the candle is green, then the price of gold, um, went up for that particular day. If the candle is white, the price of gold went down for that day. And so, for these purposes, let's say here, starting at the 1st of January. So, right in here, the 1st of January, the price of gold, if you look over here to the right side of the chart, was around $2,060. Okay. So let's say I invested my $10,000. I bought 5 ounces of gold, 5 gold coins. Well, the price of gold as of today, right now, we haven't even quite finished the month of January. So roughly a month in, the price of gold as we speak right now is what's that, 2000, right at 2021, 2023, something like that. So let's just say, for ease sake, that the price was 2060 and now it's around 2020. So we're roughly $40 or so in the hole, in terms of the value that our gold coins have lost. So not a huge deal. Your 5 coins right now, but they're down about $40 per. So you're down roughly $200. So not a huge deal, not a big thing, right? So ultimately, we're waiting for, as a lot of these analysts say, go through 2024 into 2025. How far into that? And, hopefully, gold is going to get somewhere up here. I'd have to shrink this chart a lot. Somewhere up here to this $3,000 range. We're gonna see that price go up there. But what we like to do is take a look at this and say, how can you take advantage of trading the price of gold? Every time, again, one of these candles is white, it says that the value of gold dropped for that particular day. And so let's say if we were here, instead of buying gold here in January, the 1st of January, if we actually sold gold, and there is a way within these financial systems that you can actually sell the asset. It's basically just taking a position that says that you believe the price is going to go down. And so it works on a contract for a difference situation. That's for another time, another video to explain the details of it. But we could have, if we had knowledge that the price of gold was actually going to go down, then I would not have bought it the 1st of January. I would have either taken a financial position that says I want to profit if the value goes down, or I would have just sat on my hands and said, you know what, I'll hold on to my $10,000 and I'm not going to buy the price of gold now. If I'd have bought it today instead of buying it on January 1st, I would have already made $200. And so that's the kind of way we like to think through that. And so let me go to a little more detailed chart where I started here was this is an hourly chart. And so this shows you the price of gold on an hourly basis. And I'm going to go fast forward here. This is the end of December. So this is January. So same chart. I'm going to zoom it out a little bit. Same chart here, the beginning of January. And this is where we were again. The price of gold somewhere around this 2060 area. And you can see on the hourly chart, the price did go up a little and then it came down, went up a little and down. And so the price of gold, as the hours go by, has really been just moving up and down, up and down. Overall, it's been decreasing because we're down about $40. But there are huge opportunities in the market to be able to capitalize on things when the prices are going up or down. And, there's just, you have to be able to understand the language, be able to read, technical charts, understand there's lots of things that people look at. We have charts that are, have some examples of just a ton of things on them. Charts that look like this, that are full of indicators and markers, and some are red and some are blue and some are yellow and some are green, and you're just kind of wondering, what is really going on here. But a lot of those tools are very useful to help you make financial decisions about when to buy an asset or not. Okay, and so I'm going to go through a situation here with one of our AI systems. I'm going to use this time here to show you how we have trained and created AI systems that are able to read the things that we read. We've trained these systems to be able to look at technical charts, look at a lot of different information, prices, volumes, averages, strengths, relative strengths of things. If something is really strong buying or really strong selling, all those different kinds of things. And so I'm going to play through this and show you an example of how our trading system, how we have traded gold, for the month, and how a system like this can be helpful in identifying opportunities to buy and sell, and substantially more, deliver substantially more, profits or increased returns, whatever you want to call it, on your assets. Okay. And so let's go through this. This is just a strategy tester here. For those of you who are familiar with this kind of system, again, this is a MetaTrader 4. You're able to use the strategy here. So what I've loaded on here is, our AI strategy, one of our AI strategies. We have a lot of different ones, but one particular that we run pretty consistently on an asset like gold. And I'm just going to play through this and show you some of the decisions that this system would be making about buying and selling, getting in and out. And it's all done with, risk guidelines. We're able to give this system, particulars to say, hey, I only want to risk X% of my account. That's usually anywhere from 1% to 5% or something if we're being kind of aggressive. And, the system is able to go in and make those kind of decisions and buy when it sees an opportunity to buy, sell when it sees an opportunity to sell, and profit going both ways. Okay. And so let's go through how our January would look like. And again, as a reminder, we would have bought 5 gold coins. And so far for the month of January, we're down about, what we said, about $200. Okay. So we're going to take this same $10,000. I'm going to go into my properties in here, and I'm going to tell my system here, this is our Aquila Snipe strategy that we're trading, just one of the strategies that we use here. And I'm going to tell the system, hey, I have $10,000 to invest in here. And I want to look at, trading gold. This is the asset that I'm going to look at. So I'm starting with that. I've given it some parameters in here. We have different inputs and things that you can, tweak a little bit. But it's pretty much designed, with everything that's built in. All the decision making tools that it needs are already incorporated into the EA. Okay, the expert advisor. And so let's do this. So we're going to trade gold, and we're going to trade it. The trade time, let me move myself out of the way here again. The trade time is from January 1st, 2024 through today. Today is January 26th. And again, you guys can see I'm working pretty late. It's right at 1 a.m. But I've had just a lot of things that we've had working on. So it's no problem. I'll get some sleep after this. So let's start this. And so if I was to start this strategy, I'm going to replay the month of January, and we're going to see how we would have done here. So it's updating, it's loading the charts and things here. I'm going to clean this up a little bit just so we can see. Okay. And so I'm going to pause this for a second. And so right now we're trading gold. This particular strategy, we're using the 30-minute time frame. So we're going to trade gold on a 30-minute time frame. And let me move this a little bit. You can see a little bit of the feedback that we have on here. It's basically this is a minimalist look of the trading system here. So it's going to show us here what we started with. So our starting balance was $10,000. Our equity is $10,000 because we have not taken any trades. This is the current profit. So as we move along, it's going to tell us, are we in profit by X amount, or are we out of profit? And this is one of the visual cues that this particular strategy gives us. It helps us understand, relative to the time frame that we're looking at. So here, relative to the 30-minute time frame, is the market in a buying position, or if it's in a selling position? And that's something we can use again on any time frame. And so we're going to use those kind of cues, but our AI system is going to do it for us. This is something that could be running the whole month, and we have had running on a variety of different accounts for the whole month of January and did not have to do anything to it. And so this particular system, we'll see how this plays out. So we're going to start here with January 1st and just let it play a little bit and see what kind of opportunities that we'll find. So right now, our AI system is being pretty smart. Is using all the different tools and things that we've trained it on, and it's saying, here is relatively what it's looking for. It's looking for a strong buy strength to give it the indication that it's time to buy. It's looking for a strong sell strength to say, when it wants to sell. And it's a lot of, there's probably 6 to 8 different things that it's looking at to determine that value. So you see here, we just bought, the buy strength jumped up pretty high. It says, hey, that strength is high. This is time to buy. And you're going to see the market's going to dance around a little bit. It's going to play back and forth. This is our profit. We're negative 100 or so dollars, minus 300. And it's going to move back and forth a little bit. Again, we're trading right now. So trading in the market, the market's going to be pretty dynamic. But every time we see one of these blue marks, it's assessing itself to say, hey, if I'm still confident of my decision to buy, I'm going to buy again. And so we bought here once, we bought again, we bought a third time. And so right now we're 3 times, 3 different positions that we are into this gold trade. And now this one just closed out. I'm going to stop this for a second. This just closed out because right now what's built into the system is relative uh, strength measures. I'm trying to think a good word for that, but it's things to kind of describe, help the system to understand, how strong is this market supporting my decision to either buy or sell. And so, because we were in a couple of different buy positions already, uh, the AI system, read and detected that, hey, there's a little something that's going on here. This buy strength peaked out a couple of times. And so it closed these trades. It saw something that it did not like at the time to say, I need to continue to hold these trades. So it took it out and took a small profit. Right now we're up. We made about $75. So our equity, we started with 10,000. We're about 10,075. And so if I look at my comments over here in my journal, it's going to tell me why did I close out this trade, and let's see what decision it made. Okay, here it tells me, hey, I closed out all buys, buy strength maxed out. And so our AI system is saying, hey, I like what I saw. I took this buy, but I'm also seeing some resistance here, some white candles showing that the price is going down, and then one's going back up. So it deemed, based on its training and its technology that's using, that, hey, this buy strength is maxed out temporarily. Let's get out of here, take a small profit, and let's reassess. Okay, so let's go back and let it continue to run. And eventually, I'm going to speed this up as we get running because we're going to go through the whole month of January so far. So it looks like we're back into another buy position. So after closing the first ones out, it said, "Hey, okay, I still see this buy. Let me hold on to this for a little bit." And these areas down here, when we take an entry here, the green, so we exited once again. Let's see the reason that we exited this time. It's probably going to be the same because this buy strength is up at 100%. So it says right now, everything that it sees in the market says that gold is buying, and it's been buying at a relative strength of 100%. Over all these different factors. So it says, hey, again, great opportunity. Let's take a little bit of profit and not run the risk that when it's doing nothing but buying, at some point sellers are going to come into this market, and people who bought gold down here earlier before the end of the year, they're going to realize profits up here, and this thing is going to pull back and start falling. So our AI system, once again, let's see what it said. Yep, buy strength maxed out, and so we're going to exit those positions. Okay, let's continue. I was going to point out where our profit targets and things are. And so it did continue to buy. So it looked like we got out a little bit early there, but it's fine. This is a system that's doing this. The AI system is doing all of this is going on probably while I'm sleeping. This is January 2nd at 7 in the morning. And actually, this is UTC time. So that's around midnight or so here on the East Coast. So we're snoozing somewhere, sleeping while this system is doing its thing. Okay. So we entered another position here. And I wanted to point out here every time we enter this kind of position, the green shows us, the blue arrow shows us where we entered. The green line shows our entry position. The red area down here is our stop loss. And so the stop loss is just a way of us saying, look, we believe that for this time being, that the price of gold is going up. If we're wrong and the price of gold actually goes the other way, then we want to exit that position. We don't want to just hold it and just wait and see where the price of gold goes. So that's what our stop loss is down here. So these red positions here at the bottom indicate this is where we're going to exit and take a loss if we're wrong. And these up here at the top are take profit positions. So these are areas where we're going to take our profits. We're going to close if we've made profits. We're going to close it out and look again for another opportunity to get into the market. Okay. So as you see, we're still here dancing. So this is the first day the markets opened back up was January 2nd. And so we're just a couple of hours into the day and we're pretty much around break even right now. We profited a little bit, but then now look like we took some losses here. And I guess in full transparency here too, that the market, our systems are able to trade at certain times of the day. So I'm letting this thing right now for these purposes just trade the whole 24 hours that the market is open. Or whatever time it's open, but we are able to specify only trade this during high volume times, and so we can do that. But it's not a big deal. So we're down a little bit here still, and now I'm going to speed this up because when we're trading in the market, we expect to lose. We expect to see losses. The thing is that we have to be able to control those losses. We control those losses by the risk that we're doing in our account, and so. The risk is being managed according to this is one of our aggressive kind of strategies. So it's being managed according to our aggressive, keys and different points that we use when we're trading something aggressively. So it's no big deal to see us go in the hole. Right now, we're $500-600 or something to the negative. All right. And now here we're back up because this position here, we took a sell on gold. At this point, our AI system said, okay, the price of gold is going to fall. It fell and came down here to our take profit area. And now we're back in the green. So we had gotten down at one point down to, I think I saw 93, 9400, something like that. But we just won a short position. And so when the price is going down, we can actually profit in the market when something is tanking. That's an amazing opportunity that we have here. Okay. So now I'm going to just speed this thing up a lot because I think I've explained the basics of how it's working. And so let's continue to go here. We're still on January 2nd. So I'm going to speed it up quite a bit. Trying to do it without it going extremely fast here. Um, okay, so here we had some other trades down this way. Looked like we took some losses here, so we're back down to around 96, 9700. We're into day 3 of the year. Okay. All right, we just took a buy here. Close that out. And I would guess that buy probably closed out for a max strength as well, which was a good thing because the market started to fall. And so now we just took a sell. And so we're going to profit if this comes down here. We just profited. Again, we're still in a sell. It's telling us that the sell strength is there. And let me pause that for 1 second here because we had one of these cases right in here our system started to read that, hey, this sell strength is pretty strong. And so it's looking for the opportunity for the price of gold to fall pretty significantly, which it did. And when it did, it closed out and took profits. Then after the next, and each one of these candles again represent the 30-minute time frame. So we close out right around here. Within the next 30 minutes to the next hour, our system sees that, hey, this thing still looks like gold is going to fall. So I'm going to take another sell position. It took another sell position here, and we'll see at maybe 30 minutes, 1 hour, another 30. 2 hours later, the price of gold fell a lot. And so we profited on all of these one, two, three different times we profited. So at this point here, we're up a little over $1,000 on this account. So $11,000 balance where we started at 10,000. Okay. All right. So let's keep going. We're in buys now. We just profited from some buys. And so from this point on, kind of just for time's sake and speed, I'm going to let the system just play here. And just so you can see, all of this is being done automatically. It's using what we call our REST system, REST. And so the R is taking into account all the risk. It's managing all the risk for us. How much to risk, when to risk it, consistently risking the same amount in the market because we know we're going to win some of the trades, and sometimes the market's going to go against us. And so that's the R, and you see where this profit is going up pretty good here. The E is the education. Education and emotions. And so all of the education that's needed, the understanding the financial markets, why does this thing work the way it does, and how to read these technical charts and understand these patterns. All those are great things to do, but a lot of people just do not have the time for that. It's difficult to make the time and to learn this. But again, we have a team of traders who've been doing this for countless years, decades, and we've used their knowledge and their skills to help train our systems, along with, again, AI. I mentioned artificial intelligence. We've had this thing go in and analyze charts, analyze different patterns and things, and help us to predict when these prices are going to move the way they are. And so right now we're up pretty good. This is around 12,000 or so. So we're up 20% or something right now. And again, the prices are going to go up and down. We're going to see this profit thing probably, increase significantly, and then we're going to lose a little bit. But the thing is, in the overall, we want to see a consistent growth of profit and being able to have a system that does it for us. So I mentioned the E is the education, but also emotions. It takes a lot of the emotions out of the game. It can be pretty stressful when you have money invested in something and you're constantly having to look at it and kind of, look around and look at your phone or open up your web browser at your portfolio. And, you're kind of praying that, by the grace of God, this thing is up today and you're in profit. You don't have to deal with that. Our system is going to manage that and take care of the emotions. And the S, the RES, the S is also some of the stress that's there. Emotions and stress kind of go together, but that's an important factor there. You're not having to worry about, well, hey, I missed an opportunity. Someone told me about this particular stock or the price of this thing, and it went up a lot, and now I'm just stressed out because I missed it. I really think that was my opportunity. All that kinds of stuff. Our AI system could care less about that. It's trained to make a decision based on technical knowledge and its technical ability to read these financial charts. And so that's what it's going to do. And the last thing, the T, the REST, the T is the time. Our system is able to do this while you do more valuable things with your time. You're able to go and spend your time focused on doing things that the Lord wants you to do, or doing things that you desire to do with your family, with your friends, with your whatever, your career, your job. And so you do not have to have dedicated time to spend with a system, or in the financial markets. And so our system again is able to manage this and give you back your time. Okay, so so far we are a couple of days into the month of January, and we're up about 40% on this account. And so we're taking small profits here. We're getting up a little bit, and you can see here that this is profiting pretty well. And so our system again is designed to, kind of help us get out when we need to get out, get in when we need to get in. But at the same time, we are trading on a small time frame, on a 30-minute time frame. So this is trading on this time frame is very subjective to short-term events, external factors that we may or may not see here. And so there's things in the financial markets on a regular basis. There's news events that happen, things like this. I see here we actually look like we took some losses here. And this was probably, in fact, let me pause this a second. This time here looks like on January 12th, around 15 or 16:30. So this time here corresponds to the time of the New York stock exchange market open, either an hour before or around that time. So 1500 hours here is 8 o'clock in the morning, Eastern Standard Time. So sometime between 8 o'clock and 9:30, there was a lot of volatility here in the market. And there's some things we were in some buys here. Looked like we closed out a few of them, but there's some ones that we lost on here. And so most likely, I could probably go back and look and see what happened on specifically on January 12th, but most likely it was some kind of news event, a Fed announcement, or something that just short term made the price of gold drop pretty substantially. That was a drop from looks like 2058 down to about 2041 or something like that. So gold, drop 16, $17 or something like that. So we may have taken a small loss on that. Something like that is going to happen. These systems are not going to be perfect and get every trade correct every single time. And so we'll see how substantially the price of gold dropped. And then it kind of eased and worked its way right back up here. So this is really fake news, if you want to call it that. I like that term, fake news. So let's keep going. And now I'm really going to speed this up because we're at the 15th now. We've still got 10 more days to go. And I'm wanting to, go ahead and close out this video so it doesn't end up being ridiculously long. But I'm going to see just how high we get here. And then we have a little pullback. I know on the accounts that we're actually trading, we actually did get up pretty significantly in here. And then, we took some losses and got us back down. We still ended up, or so far for the month, are up, substantially on those accounts in profit. But it did hit a peak, and we took some losses. Okay, so we're around 14.6 right now. On the 16th, let's speed this baby up a little bit. Okay, we're up to about 16,000. We're up to about 17,000. 18,000. So this is like 80%, people. And again, the risk that we're using on this one is probably somewhere between 3 to 5%. That's what we're, the risk of the account. And so that says if at any point in time, depending on the number of entries that we have, at any point in time, our risk could be, 3%, 5%, or something like that. So when we get the account balance up to as high as this is almost $20,000, 19,000. So 3 to 5% of that, 1,500, $2,000 or something like that. We could lose if we get caught again. And this looked like we did take a pretty big beating right here. If we get caught into something like this again, that can be a pretty big drop. So let's see. So we're on January 22nd. So it looked like we got as high as 19 $1,000. We still got a couple of days to go. We want to go through the 26th, which means it's going to stop on the 25th. So up until the last day that we have data here. So see, we've taken a little bit of losses. We're back down to 18,005 or something like that. A second, I'm gonna speed it up a little bit more. My next tick on speeding it up makes it go so fast that I don't want to miss everything. But I think you all can definitely see, at least the potential here in the system. Again, the comparison that we're making is we're not saying that, our system is going to be great and it's going to, print money and make everything, all peaches and ice cream. But, what we're doing is comparing the opportunity that we have with our $10,000. So with our $10,000, the first investment strategy, which is the one that most people would follow, and most people that are big companies will tell you that's the a way to go with something like gold, is we bought five gold coins, and as of today, we're actually in the negative. And so, with our particular system, trading and learning the tools of trading, the potential is something substantially higher than that. Either doing it automatically, or you can actually learn some of the things that our technical traders and AI systems have been trained to do, and you can do these things on your own. But if you look at the potential here, even though we're back down, and so we've taken some losses. This is another one of these news events, and I know we had a major news event this week, and the price of gold just really, really tanked, and so we took some losses right here. Our AI system was in here, but so this is one of those external factors, news events, that there's no way to technically read, what's going to happen with that particular event. Now, there's some settings that we have in here that you can tweak a little bit, that can help, keep us from taking a loss, something like that. But at the same time, it can help prevent you from getting an opportunity. And so the opportunity side far outweighs the potential loss side. And so we continue to use the strategies that we use, the settings that we use here. But we're still up, 67% right now on this account. So let's see. We're coming close to the end of where we are. I'm not sure if we're going to take another trade here. Now it looks like we end up with around 60 plus percent. And so again, making that comparison with our buying five gold coins, where right now we would be in the whole $200, and as of right here, we're up 6,700, almost $7,000 on the same amount of funds. And so there's nothing wrong with buying gold coins. That's not the point of what I'm saying here. But our opportunity is to maximize our assets, to maximize our funds through trading the market, and instead of just buying and holding the market. And so, with that kind of opportunity, we're able to go back, take the funds that we profit from by trading in the market, and then you can still go buy gold coins. So it looks like we just ended right here, and so we ended up with right at $16,000, 15,950. So let's say roughly $6,000 profit. And so now we're able to say, hey, with that $6,000 profit, if I choose to do so, I can go back and buy me, more gold coins. I can go buy me three more gold coins if I wanted to. Otherwise, I can take a portion of those profits out, apply them to something else that I want to do with life, and continue to leave some funds to trade in the market. So that's pretty much what I wanted to cover here. And so let's go and let's take a summary look at what our system did over this time. And so this report here just kind of gives us an overall summary of what's going on here. So we started out with $10,000 here. Our total net profit at the end of the day, once all the trades and things were done, total net profit was $5,951. So almost $6,000 profit. There's a profit factor here. It's just a way of determining um, what factor of the amount of assets that we risked that we profited on. Our absolute drawdown here. This is an important number here because it shows us what is the maximum amount that our account balance ever got below our initial start out. And so, if you remember this a little bit earlier, we actually did drop down a little bit to start, and that was trading the first day or so of the year. But after that, the profits continue to just increase in here. And so there are a lot of other factors over here. Max drawdown, this max drawdown, that's a way of saying what is the maximum amount from the very highest point that was ever recorded on the account um, to the lowest point that the account got. What is that maximum number? Or actually, from the highest point it ever got to the point to where it stabilized. And so that was $3,800. So that was pretty high because I think our balance got up to, I think I remember seeing it 90 something, 9,000 and some dollars. But again, that is not necessarily, you're not necessarily always going to be able to capture the amount because someone could say, well, hey, why didn't I close everything out when it was $9,000? And that's a very good, valid question, right? We didn't know we were going to take losses like this. But at the same time, you could say, well, why didn't you close it out when it was, no, I guess that would have been 9,000 in profit. Yeah. Why didn't we close it out when it was $1,000 in profit? Well, you never would have gotten to $2,000 in profit if you close it at 1,000. You never would have gotten to 5,000 in profit if you close it out at three. And so that's where, again, there's things our system is trained to do this in the market to kind of analyze to say, hey, let me manage this thing. Overall, we're looking for profit increases here. And so here, this is the overall percentage of our trades. We won approximately 68%, close to 70% of the trade. So that says roughly 70% of the time that our system saw an opportunity to either buy or sell in the market, we were correct and we actually profited from that. So that's pretty good. The last thing I'm going to leave us with is we're able to see a graph here just to kind of show this is the growth of the account. The account balance started down here at $10,000. And so just slowly, but surely, the overall portfolio has grown up here. And so we did peak out up here. This is this peak that it got as high as looks like 19,150 or so. And then it ended up being right at 16,000. And so things like that are going to happen. It's the same kind of thing like back here. We didn't get overly concerned because we peaked up to as high as $11,700, and then it dropped back down to $9,700. Why was that not a big concern? Well, because we know that's the ebbs and flow of the market. We have to be able to stay with it. And so hopefully this video was very helpful to kind of at least explain what some of our opportunities are with our trading system, with being able to learn how to read technical indicators and how to look at things in the market, how to understand, when the prices of things are moving, and be able to take advantage of that in the market. So hopefully that was helpful. If it is, please, we're going to this video will be on YouTube. Please like this particular video. Leave us some comments. If you have some comments or questions about things, I'd love to hear them. Please hit the notification bell. Subscribe to our channel. We'll continue to try to post a lot of these kinds of things, again, to help you realize that there are huge opportunities, a plethora of opportunities here in the financial markets. You just got to learn, first of all, realize that they are available, that they are accessible, and just get some help to enter this market and learn how to navigate it. Okay. All right. So I appreciate you guys. Hopefully you enjoyed this video, and we'll see you next time. Thanks.